Hey investors, thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Snowflake. Snowflake just reported their Q4 2022 results. I'm going to go through that. So essentially this is the takeaway here, that revenue growth rates are going to be slowing down. But there's a lot more to discuss here. So one of the things that I think quite interesting is to actually look at Snowflake's ability to make free cash flow. So one of the things that I wanted to highlight is that it appears that the way that Snowflake talks about its adjusted free cash flow margins is that it adds back the taxes that it pays on management stock compensation. And so we're going to go through that. We're going to talk about the fact that new customers coming to Snowflake, the onboarding of that appears to be slowing down. Ultimately, when it comes to investing, it's all about odds, and you need to kind of have odds in your favor to leave yourself with ample margin of safety. And I don't think that there's enough margin of safety here. So we're going to discuss all this, okay? Before we go further, just remember, okay, that the fiscal year and calendar year are misaligned here. I'm only going to be referring to the fiscal year. So, as growth names have sold off in the past, since really November, there's been, quite a large discrepancy between the mid and small cap stocks and large cap. So, Snowflake would probably be considered a larger cap stock. So it hadn't really meaningfully sold off. It'd been, down a little bit, 20%. But now, including the after hours reaction where it's fallen a further 20%, it's kind of looking, people are kind of starting to realize maybe Snowflake isn't all that it's cracked up to be. Now, ultimately, when it comes to looking at Snowflake, you have to figure out whether the odds are in your favor or not. Okay, so here's the thing, right? They came out of Q4 2022 growing at more than 100% year over year. And everyone kind of thought that Snowflake was one of those businesses that would be growing at 100% for a few more years. And as it transpires, they're pointing to slowing down their revenue growth rates, so that this year, fiscal 23, they're going to be growing approximately 67% year over year. So there's a clear discrepancy between exiting at 100% and guiding for let's say 70%. It's just like it's people feel like it's kind of come out of the water. Now, this is the thing, right? So that guidance of 67% does not include the professional service segment. Okay, the professional service segment is growing at approximately 6% year over year. There is nobody out there that's investing in Snowflake because of its professional service segment. Okay, that is an unprofitable revenue business. That's not the thesis. Okay, so you can think about the product revenue as being the bull case, and that appears to be slowing down. Now, this is what's quite. Everyone's going to be saying, Snowflake is lowballing their estimates to allow them for an easy beat later on. Okay, Snowflake beat Q4 2022 estimates by 3%. Okay, on the top line. So that is a stark departure from what it was doing in the past. In the past, it was beating by high single digits, and Q4 2022, it beat just by low single digits. So I don't think that management is lowballing estimates way too much to allow for very, very easy beats. I think that this is relatively conservative, but I also think that it's a reasonable approach to what they believe they can do. Now, the way that what Snowflake is really attractive is that it has a very strong network effect, okay? So as more and more companies upload their data, that they break down those silos and allow other companies to access that data without latency. So it becomes a very strong network effect that as more data is uploaded, that data becomes more valuable. So it works really, really well in that sense. And the customers that use it, you can see here, net retention rates are 178%. It's just like, as they describe there, you can see on the figure, world-class retention rate, okay? I have no qualms with that. Ultimately, when everything is said and done, it has a very strong pricing power, okay? Now, see if you can see a trend in these numbers here, okay? So, for Q4 21, new customers coming on board was up 73% year over year. And then For Q1 67, Q2 60, Q3 52, and Q4 2022 new customers were up 44%. In my mind, there's a clear trend here that new customers onboarding to Snowflake is slowing down the trend. Now, I've always said follow the customers. Don't get too caught up in how the revenues look. The customer knows best. And if you see a rapid acceleration in customer growth, that's good. And if you're seeing the customer growth stagnate, that's not so good. If you see the customer growth decreasing the amount of customers that are on board into a platform, that's not a good sign. And that's what you see with Snowflake. Now, the next part here is probably a little bit advanced for some people, but I'll just try and go through it as best I can and explain it the best I can, and hopefully you'll take something away, okay? So, the non-GAAP operating margin is pointing to improving from negative 3% for the year just passed to the midpoint of 1% for the year ahead, okay? Right now, in the market, it appears that investors are no longer wanting to invest at growth at any cost, okay? So investors are starting to kind of think about what is a profitable business and what is not a profitable business. It's very easy to grow revenues. It's much more difficult to grow them profitably. And market is starting to kind of discern between those two opportunities. This is not black and white. Investing is never black and white, okay? So it's a bit of nuance in there. And I'm not saying that everything is bad about Snowflake. I'm just saying that the odds are not going to be that great here. Now, this part is probably a bit challenging, but I'll try my best to explain, okay? So, Snowflake's free cash flow margin, the green arrow, is 7%. But then they add back the taxes that they pay on the management team's compensation, okay? So, on stock options, they deployed 69 million during fiscal 22 to offset the taxes that the management had to pay to execute their options. Now, if you think about it, right? So that puts the adjusted free cash flow margin of 12%. And that's what they talk about. You know, when Snowflake talks about we have a very high adjusted free cash flow margin, that's after backing in the taxes that they pay on the compensation package. And, you know, management doesn't work for free. So, you know, that's a real running cost. And anyone that thinks otherwise is deluding themselves. So when you think about it, right, it looks as if the free cash flow that the business actually made was 81 million, and of that, 69 million went to pay the taxman. So it's like it could be said that Snowflake is actually just working for executives to kind of cash in their options. Now, moving on. So when they talk about for next year that they're going to be expanding their free cash flow margin from 12% just now to 15%, if you think about it, it's not really going to be expanding that much at all. And a large part of that is just stock-based compensation that gets added back. So it doesn't look that compelling once you actually stop to think about this business. Now, right now, after the sell-off of 20%, the stock is priced at approximately 38 times forward sales. Now, this time last year, paying 38 times forward sales for a business that is growing approximately 70%, it's fair enough. You know, you got plenty of these businesses like Cloudflare. You know, it's like you got lots of these opportunities like that. But this time around, you know, in 2022, investors starting to think themselves, there are plenty of other businesses out there that are growing at somewhere between 50 to 60% compounded annual growth rates that are priced at meaningfully below 15 times forward sales, sometimes even lower than that. Why would anyone want to pay nearly 40 times forward sales for a business that, you know, has no real clear path to profitability? I mean, real actual, you know, once everything like stock-based compensation gets added back. So I don't really know. So when it comes to it, right, investing is never really that easy. And it's always obvious in hindsight, but going into it is never obvious, right? So you're working with incomplete information. You're working as an outsider trying to make the best decisions that you can. And you have to leave odds. You have to go in with odds that leave ample margin of safety. And I fail to see how there's enough margin of safety here. So as an investor, you have two choices. You can reassess your investment thesis right now, or you can do it much later at a lower valuation. You know, it's always a difficult choice, but these are the two choices available. So I personally will be deploying my own capital into ideas that I think have better risk reward. If you want to find out what those are, don't forget to check out my marketplace. It's called Deep Value Returns. I come in, drop me a line, and I find for you high quality, actionable investment insights. Thank you so much for listening. See you next time. Bye bye.